Alrighty, traders. Good morning and welcome to the Forex Market Outlook. As we take a look at the setups this morning, hopefully everyone has got their cup of coffee. I have certainly got mine. As you can see right here, it says here, I don't need Google. My father knows everything. I got this from my son, by the way. No, I don't know everything, but what I do know is what's going on in the market right now. So we're going to go ahead and take a look and see what's going on. Remember, traders, we are following a very simple trading strategy. The most important thing right here, and I have to make sure that I'm clear on this, is that the strategy that we're following has a very good strike rate, which means we hit our targets pretty often. But we have to manage the risk because of the way the markets are trading, right? So if the market's in a very strong trend, we're going to add on positions onto that where we're actually going to be trading against the trend. Now, I spoke yesterday about the different phases of the market. And the market moves in three phases. We go into contraction phase, then expansion, and then we move into what we call a trend phase. And so what we have to identify is where we are inside those phases to identify where to take our profit. Because if the market's going to move, let's say, in an expansion phase, which means that it breaks out of consolidation, heads south, it's a false breakout, we call it a false bear, or at least a bear trap, and the market goes ahead and moves into this bear trap, which means that price moves back up again. And I explained over the last couple of days that this is how banks get in at lower rates, getting better pricing, and push price back up again, right? So when we're inside this expansion phase and we start adding positions, and you're probably saying, well, Big Dog, why, if the market's moving south, are we buying? Well, you see, this is where the smart money's at, right? The smart money is at not where the market's actually going, but where the market's going to react at. And we're expecting price to react at support and go ahead and move back up again. Because we understand how banks are working, and we understand that the banks are pushing price lower so that they can get in at better rates so they can go ahead and push the price back up again. And price would go and continue to move down, further down south, as it takes out what we call liquidation levels. What are liquidation levels? Liquidation levels are these support levels where traders, retail traders, are holding up their stop losses. Retail traders are looking to place their stop losses at lows and highs in the marketplace. Banks know that. All right. And so what's happening is banks are going to push their price down to where they see these liquidation levels, where they're anticipating stop levels to be at. And as traders are getting stopped out, they are adding positions and they're making up, of course, the losses of what the retail traders are giving back to the banks. So we're going to go ahead and make sure that we understand where that's at, right? So let's go firstly and update ourselves as to what's going on with our trades that we currently have. Remember, we picked up Aussie crosses. We had 4 currency pairs that we've picked up so far this week that we're currently trading, and it's been buying the Aussie. That's the rule this week, is buying the Aussie. We've looked at all the other currency pairs, and it's really just the Aussies that set up for buying opportunities. Now, I'm not saying that any other pair is not perhaps setting up with a trend opportunity. I'm just saying we've got in on the Aussies based on the strategy we're following right now. So let's go ahead and take a look and see what is it that we do have here that we can pay attention to and take advantage of. All right. So if I go to the trades that we've got currently right here, this is the trades that we are in right now. You can see we're Aussie CAD, Aussie JPY, Aussie US dollar, and then Euro Aussie. And the Euro Aussie we're selling, but the rest of it we're buying because we are basically buying into Aussie. All right. We've committed ourselves to the Aussie. And so we're currently still active right now on these trades. Now, we're moving in the money. We're in the money on these trades. We're looking good. We just want to go ahead and confirm whether or not price is hitting resistance so that we can make a decision whether or not we have to take profits a little early. So what we're going to go ahead and do is go to the charts, and we're going to go to the first currency pair and take a look at this. And I want to go ahead and flip over right here to our document here. And by the way, in the description, you'll be able to pull this document out and actually view exactly what I'm seeing. I'm seeing a whole bunch of traders actually really starting to log in on that. And so you can go down and actually click onto that document, and you can view that document on your own time. And as I update it on a week-to-week basis, you'll be able to track exactly where we are based on our position we're trading. And of course, the direction we're trading. And then what I also do here in this document, I put in the first entry point that we enter. I may be entering multiple times, but the first entry point is always going to be the first one that we're going to log in there, because we want to make sure that as price moves against us and as we add new positions in, I want to at least go. I at least want to identify where was my first entry point. Where's my first entry point? Now we'll also identify what our break-even point is when we get multiple positions in. We'll focus on that as well. But right now, let's go ahead and focus in on this document right here. And I noticed that we've got the New Zealand CAD right here, and we said the New Zealand CAD is showing here that we have an unhit target, and nothing seems to be picking us up on that pair. Let's go to the New Zealand CAD right here and just go ahead and find out what's going on. All right, well, we can see here that this is the target that we're chasing after right here. All right, so this is the target that we're looking for right here. And by the way, traders, you probably noticed that there is no chat box in the session today. I want to go ahead and say that I've actually switched off the chat box just so I can get through the details of what I'm explaining to you today. But what you have the option to do is to go ahead and actually post questions in the commentary. Post questions there, and as I go through my day, I'll go ahead and address those questions and help you with things that you need to know a little bit more about. So if you have any questions, please use the comment box to go ahead and post those questions, and I'll certainly go ahead and address those questions once we're done with the session. Look, it's a 30-minute session. We're quick in and out. It's not really going to be ideal for addressing questions during the session, but certainly we'll go ahead and address those questions as you post them in the chat, and we'll address them in the next live session. So, all right, so that's cool there. All right, and so we've got the New Zealand CAD sitting up here with a trading opportunity, but it hasn't activated yet because we haven't seen the RSI move into an oversold condition here. It looks like we tried to attempt it right about here, early phases of the week. But you can see right here we traded still above the 30% level. It's at 31.69. So no trade was activated right here on this setup right here. Now I'm going to go ahead and take a look at a couple other things. And so I'm going to go to this document right here and say that we're still showing an unhit target. Right? So nothing has triggered yet on this one right here. So we're still only holding on to these 4 currency pairs, and we're active right about now. Now, let's go ahead and take a look at where we are on each one of those. Now, traders, you'll probably notice that I'm not paying attention to any other currency pair other than this one right here. Other than the 4 that we're in already. And that's because they are hit targets. When we have hit targets, I don't really pay attention to that. And so the strategy is pretty cool because it allows you to be able to focus in on the pairs that actually are starting to move. And so we don't have to go ahead and diversify our focus on things that are just like, not doing anything, not creating any opportunity for us, but we're focusing on the ones that actually are creating the opportunity for us. So that's cool about the strategy as well. All right, so let's take a look at here. Man, nothing better than a good cup of coffee in the early mornings, right? All right, so we're going to go ahead and see the Aussie. I said it's Aussie. Let's go to Aussie. Let's go to Aussie New Zealand. JPY first. So Aussie JPY, we got in on this trade right here down below. I believe it was about here. In fact, we can look at the price we got in at. We got in on the JPY was at 74.09. So 74.09. And by the way, that was taken from this live trading account right here. And you can see right here, there it is, JPY. And we got picked up at 74.09. There it is there. All right. So 74.09. And price is trading at 75.19, so we're about 110 pips up in the money. In fact, I've got I may have an indicator right here that can actually give us this right here. Let's see here, indicator. There we go. I'm going to pull this over here. All right, then there it shows me that I am currently up right now Oh, hang on, wait a minute. This is not the right pair. Let me go to the Aussie JPY. There it is. Drag this one over. And there it is. It's showing me that I'm up about, currently right now, 101 pips actually. 101 pips, that's strange. How would we, no, that cannot be. Let's see, 74.09. Current price is trading at, oh yeah, that's right, 75.11. So it is right. All right, so we're actually up about 101 pips right now on this trade right here. So, okay, cool. So we're about 101 pips up right now, and we're expecting price. Now, this is the thing. I'm expecting price to go up towards my target up here at the top right here. But I'm also going to go ahead and say that that the market's hitting a very important resistance level right here. This is actually very much a resistance level here. As we get to, I'm going to call it my wave channel. This wave channel is actually something we speak about in the in my live trading room that takes place on a Tuesday, Wednesday, and Thursday from 10 a.m. in the morning. It's a 2-hour session. For those that are in that, they'll know what I'm talking about. But for those that don't know, this is what I call my wave channel right here. And I've also got a EMA right here that is showing market resistance right about here. So we've got a little bit of market resistance right here. Price has moved in, consolidated for a bit. I'm expecting price to break through this to get to my target. And I'm also noticing that the RSI not quite in an overbought condition as of right now. I'm also looking at my smart gauge here to the right hand side. And the smart gauge right now is also saying that we are, I would say, 65% bullish at the moment right now. So, and the smart gauge, it comprises of a bunch of indicators that I've added to it to give me directional bias. And so that's also confirming that we are still bullish at the moment right now. Now, if I see this go into the neutral zone here, then, and I see consolidation here, then I may go ahead and say, you know what, maybe it's time to go ahead and cash out, get the heck out of Dodge. 110, 101 pips is not a bad deal for the week on that currency pair. I'll go ahead and cash it out and move on to the next opportunity. So we'll take a look at that as well and see whether or not it's worth taking the money. Now I'm going to go ahead and take a look at my my daily as well. And the one good thing about the daily here is, traders, and you'll be very excited to know this, but we've moved back in. Let me go ahead and move that around. Take a look here. We've moved back inside this wedge that we had seen right here. Now, I did speak about this being a 5-wave structure and saying that with a 5-wave structure, we're expecting price to break out on that 6th move. So 1, 2, 3, 4, 5, and then breakout. So this is the deal. With us holding here back inside the range, this could be an anticipated correction move, right? So which means that we could expect price to go ahead and work its way back up and then start selling off back down again. All right? And that's because of this 5th wave. And if this does continue to rally up and take out the high right here, then we're going to get back to this downward trend line and then head off back down south. So I'm still going to stay locked and loaded. Now, I do not want greed to be the focus right now. All right? The whole point of the strategy is not to get in there and hit home runs. All right? We spoke about it a couple of days ago. We said that we were going to go ahead and what? Eat the elephant piece by piece, so to speak, right? And that's exactly what we're going to do. We're going to chew up this market piece by piece. So what our intentions are here is to take small profits without risking a whole bunch of money. All right? And so as we go ahead and we take a look at the details right here, I'm going to go ahead and pay attention to where is my pivot point, because that's important right here. Where is the target that I'm looking to chase after, and how far am I to that target? Well, if we go back to the 1 hour chart right here, my target is sitting at 75.46. All right, 75.46. What does that mean, traders? It means that we're 101 pips up in the money, and we've got about 36 pips left in the trade. All right, we've got about 36 pips left. So we're up 101. We've got 36 pips left. Listen here. If we see resistance, if we see that market's holding back, is 36 pips really going to make a big change to your financial position? No. Is 101 pips going to make a good change here? Yes. So you got to look at it as this and say, hey, listen here, I also don't want to get into the habit of just closing out early, right? I don't want to get you into the habit of closing out early because we don't want to trade in fear. We don't want to trade in this sort of environment where when we're in the money, we suddenly just want to get in and take a profit, right? We don't want to get to that panic stage that every time we see green, we're like, oh my gosh, I gotta go take my money out of the market before they take it away from me. All right, we've got to allow the markets to do what it needs to do. And the reason why we are confident in the things that we do, in the way we trade, is because we've done our homework already. We already know that this strategy that we trade has a 97% success rate. And with a 97% success rate, we know that we can, with confidence, allow the markets to do what it needs to do. And that these temporary support and resistance levels are really just temporary support and resistance levels. All right, so we don't have to get into the sign of panic. But I also look at trading this way. I want it to be trading from a week-to-week basis, right? Every week there's something new happening. We've just seen out in the news that President Trump has decided that's it. He's standing back. He's not going to take any more action. So he says. But Iran has said, no ways, man, we're going to go ahead and do something harsher than they did before. They're not standing back. They said, and there's nothing. They're saying that there's nothing that the U.S. can do about it. So they are almost saying, like, man, we're going to just keep going ahead and doing this. Now, the market reacted positively when President Trump said yesterday that his administration is going to be looking to negotiate with the Tehran around sanctions against Iran. So we've seen the market react positively yesterday. In fact, we saw a really good move on the commodity pairs. The Aussie dollar in particular, the one that we actually traded, it created some great movement to the upside. So we do see that fundamentals can affect the markets on a week-to-week basis, right? Every week there's something new coming out. You know, we had Bank of England. Carney that spoke this morning about saying that he's got 250 basis point policy space available for him to use, and not that he's going to use all that 250 basis point leverage that he has, but he's saying that he's got that leverage to use. Now, price on the pound has just recently gone ahead and dropped. We've just seen pound really drop against the major pairs over this morning's news. And is that just a reaction? Could that be an expansionary move where price has been pushed down and just enough for us to go ahead and buy in at a lower price and allow pound to continue to rally? Because ultimately we're in this channel, in this bullish channel on the pound. And so we are looking for pound to go ahead and continue to rally. So traders, all of that information is important, right? And we need to know all of the stuff. We need to know what our strategy does and how successful our strategy is in order to be able to be really confident in the way we trade and the decisions we make. All right. So on the Aussie JPY, we do see resistance here, but I'm going to hold off a little bit. I'm going to hold off a little bit and not take my profit yet off the table. Let's see what it does at this resistance level, and see if we can get this final push up by the end of Friday. So Friday would be maybe a decision making. We can make the decision tomorrow. On the Aussie JPY right here. We've only got 36 pips. Now, traders can go ahead and start locking in. If you want to go ahead and say, well, Big Dog, you know what I'm going to do is I'm going to lock in right now. And I'm going to go ahead and say that, I don't mind it going up another 36 pips. But what I want to do is I want to go ahead and lock in my profit right here and put my stop loss, protect that position, whether it's locking in 40 pips or 60 pips and allowing 40 pips to freely move. That's up to you. I mean, you can do things like that, or just say, Big Dog, I'm done. 36 pips not going to change my lifestyle, but 101 pips would definitely make a big change to my trading account right now. So take your profit, get the heck out of Dodge. That's what you're going to do. Now, let's go ahead and take a look at, and remember, traders, what I'm doing here in these live sessions, all right, what I'm doing, I think it needs to be clear up front. What I'm doing in these live sessions, I'm just giving you what I'm thinking. I'm telling you exactly how I'm thinking. I'm not telling you what to do because I am not a CTA. I cannot tell you how to trade, what to do, and how, work out all your details about your trading. But I'm telling you how I'm trading, right? In exactly the way I'm trading and what decisions I'm going to be making on my live trading account will be dependent on, on what I feel comfortable with. And whatever you feel comfortable with, whatever decision you make, it's up to you. That's your decision. That's your responsibility, right? So be sure that we're clear on that. All right, so I'm going to go ahead and stay lock and loaded on this position right here. And I'm going to go to now the Aussie CAD. Let's take a look at Aussie CAD. All right, so Aussie CAD right here looks pretty good. And you can see there's a slight bit of bullish channel taking place right now. And with this bullish channel, you can see right here, we're connecting the lows there. Nice little bullish channel taking off. Oh, that's horrible. But anyway, nice little bullish channel taking off right here. Looking for resistance here. We're quite a distance away from our actual target here. So we may be carrying this one over the weekend into next week, as price is not even there at that level. Now, I want to go ahead and take a look at a couple of other things as well. The other thing that I want to go ahead and take a look at on this is the daily time frame. Let's see what's going on right here with the daily. Well, this is the thing that we may need to pay attention to right here. Aussie CAD. Now, Aussie CAD broke out of that consolidation. Now, the question here is this expansionary? All right, is this the expansion phase inside the smaller range right here? Is price actually moved down south right here so that banks can buy in and push price back up again? And then maybe even then at that point, we'll then may see price moving back down to the bottom right here. So the expansion phase will actually be a breakout to the sell side. So it's going to be a bull and bear trap, both sides right here, and then it will move into a trend. All right. Now that trend could be just a trend with inside this bigger range. That could be that possibility as well. Now, what we have to look for right here is how price deals with this level right here. Are we going to see price holding there? And if price does hold there and start working its way back down south again, then yes, we are probably going to go ahead and test the support down here. Now, what I'm going to look for is I'm in on one position. Now, if I get in and I'm very far away from my target, so I'm nowhere near at a point where I want to go ahead and take my profit, but I want to look at and see how far can the market move further down south. So it looks like about another 125 pips. Now, my average true range is about 51 pips, so which means that I may enter another 1 or 2 positions on this. And if I enter another 1 or 2 positions, is that going to put me in a bad position? Not at all. And I'll tell you why. Take a look at where your entry point is, and I think this is important right here. Let's go take a look at where the entry point is on this pair. So Aussie CAD, our entry point is at 89.52, right? 89.52. So let's go ahead and plot that on the chart. 89.52 is going to place us at around about there. All right, there it is. Okay, give or take a few. All right, I think we've got the. Let me try. There we go. 85.52. So that's where our entry point is. So if we enter the market another, let's see here. If we go ahead and enter the market 50 pips down around about here, and then we enter the market maybe another 50 pips down here. All right. So if we enter another 2 times right here, so which means we'll have 3 positions in. Check this out. This is where we're going to score, because if price moves down to this level right here, finds the support there, and then starts working its way back up again to retest the breakout of that resistance, which is past support, then we're going to be at break even right here. Remember I told you it's important to know what your first position or your first entry point is? Well, when we get to this point, we're going to be profiting on this trade, and we're going to be profiting on that trade right here. And we'll go ahead and close out at our break even point, because if we hit resistance right here and we don't break back above that resistance, then clearly it's time to go ahead and cash out. In fact, when it comes back to retest this level right here, we can actually move our stops to break even of the first entry point and see if price moves back up to the top here. And if we do break up above, then we're on a free ride, and it's free money for all. All right. And so that's what we're going to do on this position right here. So I am not concerned about Aussie CAD right now, and I'm not going to make any rash decision on going ahead and closing out because of this resistance right here. If price is rejected off that level and we move south, then I'll be looking for price to get down to this level, which means I may enter multiple times before price starts moving in my favor again. Okay? Does it make sense? All right? All right. There's no panic. Remember, we're always going to make sure that we have good equity management in our trades so that if we have to add in more positions, it's not going to put us in an awkward position or risk us to be margin called or create margin issues. All right? Very important right there. All right. All right. Let's take a look here. What else we got going here? Aussie US dollar. Take a look at Aussie US dollar right here. Aussie US dollar has been falling like a rock. Now, you can see right here, traders, actually in my learning trading room that take place every Tuesday, Wednesday, and Thursday. We're actually looked at the Aussie US dollar, and we did notice that we're in a bullish channel. Yeah, you can see here, I've marked it off, that we're actually in a bullish channel right here. Now, the learning trading room is more of a trading strategy that we follow in that trading room. But you can see right here, Aussie US dollar, we said bullish channel right here. And we did say we're going to sell at resistance. All right, we said we're going to sell at resistance. We're going to use a gear down scalping approach. And we decided to go ahead and sell all the way here at the top. Now, what we're going to be doing as a trend trading strategy, we're going to be looking to trade in the direction of the trend, but we're also going to do some counter trading with a smaller gear down trading approach. Now, if you haven't watched any of my videos here on YouTube about gearing down and gearing up, you may want to go ahead and do that. At the end of this video, make sure that you go ahead and search the video on gearing up, gearing down. All right. If you're watching this video not live but after the fact, I'll make sure that that video is actually posted up on at the back of the video so that you can go ahead and access that video as it pops up. But definitely look for that. But now, if we look at the Aussie right here, if we were selling, all right, if we were selling based off this channel at the top right here, if we were selling, then we have to identify where to get the heck out of Dodge. Now, this would be the place to want to get out, right about here. Now, I can also go ahead and add in some additional stuff right here that makes me look so much better. I'm so much more professional when I can do this. All right, I can add in this right here and say, well, we've broken through that support, and we could possibly go ahead and retest it by something like that, and then go ahead and head south. This will form some sort of a head and shoulders pattern. This will be the right tip right here. And we'll definitely get down to this trend line if we don't do it as of right now. So I've got to make a decision. My decision here is if I'm going to stop trading short. All right. So the deal is this. If you are in any short-term trading opportunity, all right, if you're in any short-term trading opportunity and you're in the money right now, all right, you're in the money. I'm gonna adjust my my camera right here. Then what I suggest that you do is you make sure that if you're in the money, make sure that when the market comes to these levels, like you're seeing right here, when the market comes to these levels right here, where there's only so much profit left, let's call that what it is. Actually, let me go ahead and measure that out. Let me measure it out by doing this. All right, you know what I'm going to do? I'm just take this right here. I'm grab my little tool and I'm just mark it. All right, there it is, about 32 pips. Okay, so the market has dropped about 157, call it 160 pips right here. You got about 32 pips left. Now, if we had got in, let me see what our target was at right here. Our target on those, and I'm looking at Aussie US dollar. Our target was 65.65 right here. All right. 65.65. So if I look over here, 65.65 is all the way down south. Is that right? Oh yeah, that is way down here. Are you kidding me? Is that exactly what we're chasing after? Let me say, yeah, there's a gear down approach. Let's see, it's 65.65, gearing down. We did get in at 69, so we'll call it 170. 65, that's a huge target to the downside. You know what, traders, this is not right. Let's see here, 69. Our stop loss is like 12 pips. No ways. All right, so okay, this is the deal. 65.65 is obviously a level that we're looking for price to move back to, and I'm looking at it like this, and I'm saying that we're probably going to be looking for price to move back down to, oh man, I've got to readjust that target because 65.65 is just way too low. Yeah, I'll address that in the trading room right here. I would say that if we were trading short right here, right at the top, which by the way we were, then I would say that this level right here, along with the trend line, and I'm going to go ahead and mark it off. So as price moves, I would say that 68.32 is the target right here. So let me change this to 68.32. So we've got still some room. 68.32 would probably be the better target. And if you look at the risk reward ratio on this, we were risking about 12 pips on this trade right here. Look at that, 12 pips, not a very big stop. And you can take a look at the target. The target was set here at 68. If it's 68.32, that's going to be what's that? Let's see, 100. Call it 170 pips. About 170 pip target. 12 pips risk with about 170 pip target. All right, pretty good, right? So I'm going to say this. If we get to a point right here where price is at this level right here, and we've got about 32 pips left, and you've picked up 170 with a risk of 12 pips, it's time to start staying inside. All right, it's absolutely time to start staying inside. Take your profit, get the heck out of Dodge. You got indecision right here. Who gives a living crap, right? If market moves further down, so I don't know if I can say that. I guess it's my YouTube channel. I can say it, but who gives a crap if the market's going to continue to move back down and break down another 100 pips? You've gained a good risk-reward ratio on that trade. And if you gained a good risk-reward ratio on your trade, and guess, that's like what, 10 times? No, more than that. It's about 15 times. So if you're risking 12 pips, 10 times of that would be 120 pips. 15 times that would be, call 160 plus. So you're looking at 15 times whatever you were risking. The risk-reward ratio is 1 to 15. Wow. All right. That means you risk 1%, you're gaining, what, 15%? Wow. Okay, so this is the deal. If we take a look over here, we're certainly going to get the heck out of Dodge. Now, with this indecision that's happening right here, that's good for us. It's good for business us as a target trader. Because as a target trader, we are currently buying, all right, at 68.80. So 68.80, we actually buying in. We're slightly down on that. Let's take a look and see our position right here. And this is Aussie USD. There it is there. Aussie USD. I'm going to go ahead and add in that break-even indicator right here so we can see what's going on. There it is. Okay, so you can see right here our break-even point. We're down about 22 pips at the moment right now. We're down 22 pips, but we're okay. Because if price starts going back up again, and if it's an expansionary move, as you can see right here, we could be heading out of this contraction phase into an expansion phase, which can do this, and then head back down south. So if it does this over here, we're going to be good to go because we do expecting price to go back up again, right? We've already looked at the larger time frame. We're expecting price to go back up again. So if I look at this and I break it down from this larger time frame right here, but I bring it to my 1 hour chart, then I'm going to look at this and say, okay, price can do this. Price can go ahead and break south and then break back up north and then break back down south again. And this is just the correction that we're looking for as we look at the larger time frame. And the larger time frame is very clear on it, saying that, hey, we should be heading, let's look at the larger time frame right here. We should be heading back up north, right here, based on this indecision, back up north right here, maybe retest this resistance right here, maybe create a right tip of the head and shoulder pattern, and then head back down south right here. All right, and maybe even possibly start going even further down south as it remains inside this larger consolidation right here. So we'll figure that out later. But for right now, we should be looking for price to maybe pull back. If it does an expansion move, and or at least does that, breaks down south and then breaks back up again, we're going to be okay, because we'll add more positions right here, as banks will do the same to go ahead and push price back up again, only to go ahead and mess up retail traders, and with the belief that price is moving further. But what it's really doing is just giving us a nice little bear trap to pull traders in and then go ahead and push price back up again. All right. So we're going to hold on to the Aussie US dollar. All right. Going to hold on to that, expecting price to move back up. And if it's going to dip before the rally, that's also okay. We're going to be okay with that. All right. What is the last pair that we look at right here? It's going to be, we've done that. I think we've covered the CAD, JPY. We've covered. Oh yeah, Euro Aussie. And Euro Aussie is currently right now, we're buying, and we are stuck inside this wedge. We're looking for price to come up here to the top. Let's see where we are right now as to our positions. This is Euro Aussie right here. I'm going to pull in this because we've got multiple entries on this one right here. And we are, we are actually selling or buying, my bad. We're selling, we're up 32 pips in this trade right here. So we're in the money, and we're at break even on our first trade, which means that our second trade we're picking up some profit on the second trade. Let me see here as well. Okay, so with that being said, let's go ahead and take a look at where we are right here. Nice little bearish candlestick formation right here in the form of a dark cloud cover. Retesting, price is retesting that level. And so we could say that we didn't quite get to the trend or the resistance level here at the top. So didn't quite get to that point right here. But we do see that there is definitely resistance coming off here. If you had to put a trend line down here, we can see why price has been rejected at that level. We also stayed below this downward trend line right here as well, which means that we're expecting price to continue to fall back south towards this level here, and maybe to an extreme low down here, which is priced at around about 58.94. So I'm quite happy holding on to this position as well. And our target on this, I don't think we're too far away from our target. Let's take a look at where our target's at. Let's go to the so our target is at, on this particular pair right here, we're looking at 60.28, and price is trading at 61.97. Oh, actually, in fact, we've got still a long ways to go before our target. So 60.28 is a long ways down. Here it is here. And in pip value, we're looking at around about 170 pips still to go. So we'll continue to hold on to this. We're not, I'm going to be honest with you, we're not quite out of the woods in to say that we have trend in the same direction. We don't have the trend, actually, the short-term trend in our favor right now. And I'll say this because of this. This is just a bull flag right here. Price is still moved up. So this is the short-term trend right here. So the short-term trend does still seem to be holding bullish. And it's when we trade below this level right here, below this EMA, and that's priced around about 61.23, will we then confirm that we're going to head back down to that target. So we're not quite out of the woods. We're in the money on this. It's not quite time to go ahead and cash out now. We're in about 32 pips in the money. We'll just go ahead and hang on to this trade and see what happens over the weekend. All right, so there's the price there. We're looking at 160.25. So there's a very good possibility that we'll have a clear understanding of exactly what to do tomorrow. So tomorrow in the live session, tomorrow we'll make some decisions as to whether to hold or to cut our positions for the weekend. So we'll talk about that then. All right, and that pretty much covers up and wraps up the session for today. Traders, once again, I'm going to make sure that the links are in the description below. Also, okay, I do have a Telegram channel as well. If you don't know what that means, just go into the description. You will see there is trade ideas in a Telegram link. Click onto the Telegram link. It's going to open up a browser for you. You can go ahead and follow the steps to be able to get the trading ideas that I post in the Telegram channel. You can have it on your mobile phone. You can have it on your computer, and it's great because every time I post something, it'll pop up a message on your phone saying, "Hey, Big Dog's gone ahead and posted something," whatever the case may be. But it keeps us in the channels. Remember, we also have some social media. Please make sure that you're connected to my Instagram, Twitter, Facebook for anything that I go ahead and post on that. Appreciate you guys being here. If you haven't subscribed to the channel, if this is the first time you're in the session, please go ahead and make sure you've subscribed to the channel. Click the bell button to get notifications, and we should be good to go. If you like what you see in the video, go ahead and do that like on the bottom left, bottom right there. Go ahead and click on the like button, and I'll see you back in the next session. It's FxBigDog signing off.